I was wrong. Japan's not going to panic. The U.S. will. If the U.S. is doing something unprecedented, it should give everyone at least pause that maybe I was onto something all along. As much as I was early, anybody that thinks this Iran war is going to be over is out of their damn minds. I keep saying this. It's not me being an alarmist. I'm Egyptian. I'm Coptic Christian. I'm born in America. I understand the culture. I know how these people think. I'm of those people. Going to be doing an interview with Mr. David Lynn, who, if you don't know Mr. David Lynn, you should, because he's got a tremendous number of followers on YouTube. He's always been a good friend to get these kind of things set up whenever Japan blows up. Yeah, blows up. So I'm always the go-to when it comes to Japan for David. So
you're the person I go to when Japan blows up. Well, not so I don't mean literally blows up. That was incentive. I mean the yen has been blowing up. Hey, you were on the show. This is for my audience. Michael Gayed is the founder of the Lead Leg Media. Michael's been on the show several times in the past. He first sounded the alarm bell back on my show, 2023, and we can pull up that clip of him talking about how we're all going to get screwed if the Japan carry trade unwinds. There's another word that I used that we beat that out, and then yes. Exactly 1 year later, on August 5th, 2024, the Japanese yen the carry trade actually did unwind. The Nikkei went down I think it was 7 or 8% in a single day. Yep. I can't remember if the circuit breakers were triggered, but the S&P went down 3% that day. Huge move on the yen on that day. And now we're not getting that situation just yet. What we are getting is the U.S. government intervening for the first time since the 1998 Asian financial crisis to buy yen. Yep. And if you take a look at my chart here, again, this doesn't look like yen carry trade unwind just yet. It looks like someone stepped in and bought a massive amount of yen to backstop this bleeding, at least temporarily. Yeah. I don't know if you've ever called for a U.S. intervention, but that on the order of scale of 1 to 10, how bad would that be if the U.S. had to step in and bail them out?
Well, I think it was late last year I said something along the lines of, I was wrong, Japan's not going to panic, the U.S. will. So I was actually expecting, to some extent, I can try and pull up that post. I wasn't expecting it to be in this form, right? But as I've said to you before, policymakers are very creative at preventing creative destruction. It is interesting, right? As I look at that chart, that is a lower high, despite the intervention. And I happen to be of the opinion that I think the yen's going to undo that move. We are in a war of the market versus manipulators. And I say that very purposely. The fact that the U.S. had to step in tells you I might be onto something after all, despite all this hatred over how early I was over the thesis, when I was 100 pounds heavier than I am now, that it's such a massive intervention. The U.S. is worried that Japan is going to panic, and Japan panicking means what? Sell treasuries to raise dollars to force the yen higher. So The U.S. is trying to do it. The problem with this is, and this is why I actually argued this was bullish, right? It's like, if the thesis, I think the market has seen this as positive because it's like, all right, well, the U.S. is not going to let it happen. My problem with that is that I don't think the U.S. is that omnipotent, even with the printing press. There are so many weird dynamics when it comes to currency that I find it hard to believe the U.S. can really control this with Japan. So if you have a scenario where the yen does undo those gains, which is what I expect, then I think you're going to have a real panic happen.
Can we just back up a minute and explain to the audience who maybe missed this entire saga? This saga between Michael and I talking about what would happen to Japan, which, by the way, is not theoretical anymore. A, it happened, and B, it's currently in the process of happening, phase 2. Now, suppose the U.S. government hadn't stepped in. What would have happened? What is the scenario that Scott Bessent and Trump are worried about?
They're worried about Japan having to sell treasuries to raise dollars to support the yen themselves. They sell treasuries, that hurts the U.S. Treasury bond market as a supply, which means rates rise, yields rise. That's what they're worried about, Japan being the reason for that. Japan would rather push the yen higher by manipulating its currency than by raising its own rates, which is the only real way it could stop its inflationary pressure domestically against oil prices that are, again, priced in dollars converted to yen. Which shows you who really holds the cards. It's like, I saw on CNBC the other day, Hank Paulson himself said, yeah, the last thing we want is Japan selling our treasuries. And I'm thinking to myself, no shit. Yes, you can bleep that out. That's what I've been saying. That's phase one. right, of the whole reverse carry trade thesis from 2.5 years ago. Now, again, it's bullish until it's not, right? I think if it turns out that the intervention fails, which I think it will, and the yen retraces that move, because let's face it, no matter independent of the intervention, the carry trade is still profitable, even at these levels. The interest rate differential
Yeah.
between the U.S. and Japan is still profitable. So why in the world wouldn't you keep on reshorting the yen and borrowing
Is
from
it? Wait.
Japan and deploying it? Yeah, of course it is.
Wait a minute. Is it the 30-year? I don't know which part of the yield curve that the carry trade usually happens on, but the 30-year of the U.S. and the Japan are basically near equivalent right now. They're at par.
Yeah, but it would be it's more the shorter duration, right?
Yeah.
Simply
Okay.
where
That makes sense. Yeah. All right. Sure.
right. But and so it's like you need to. By the way, I think that's also why Warsh didn't raise rates. He doesn't want the carry trade to even get more accentuated on the short end. It's a funny coincidence that they intervened pretty much around the time of Warsh coming out and then saying no Fed hike.
What do we have a number on how much debt Japan owns? How much U.S. debt Japan owns? I'm trying to look for it.
I forget the number. I mean, I'm pretty sure that the number one holder of Treasuries,
Yeah.
or at least I'm certainly not among the top two. But again, it's the whole point is,
The BIS estimated $14.2 trillion dollars of yen swaps and forwards outstanding at the end of 2023. That's not debt, but that's yen swaps. None of that is a carry trade, however.
But I've been told Japan doesn't matter, right? Japan doesn't matter to the world. Yeah.
How big is the carry trade actually? Difficult to measure, says the BIS. Its estimate is $250 billion going into August 2024 before it unwound.
Yeah, I mean that's much more than that, and it did not unwind. That headline drives me crazy. It's gotten worse because the yen has gotten weaker. I keep going back to if it's profitable, which it is, the carry trade, then money's going to keep finding its way towards it. I mean, that's just the reality. That's why it drives me nuts when people say, "Oh, it's unwound." Are you kidding me? You can still make money with it. Why would it be unwound? So, and I'm sure there's a lot of shadow leverage also with this. So, look, the broader point is, have they kicked the can for a short amount of time here? Yes. But if the U.S. is doing something unprecedented, it should give everyone at least pause that maybe I was onto something all along. As much as I was early, I don't know when it's going to matter. Again, I think if the yen were to retrace its move, which is what I suspect. Look, I wrote a piece about this on the Lead Lag Report. Every single equity crisis, every single crash, is preceded by a currency crisis. You see it first in currency, then you see it in stocks.
Before we continue with the video, I'd like to tell you about a new opportunity to be exposed to gold and silver. Today's sponsor, ICG Silver and Gold, is one of Nevada's newest silver and gold exploration companies, having gone public earlier this year. Their flagship project is in the Tuscarora district, a district-scale silver and gold project sitting at the intersection of two of Nevada's best-known gold belts, the Carlin Trend and the Independence Trend, with both open pit and underground potential. The project sits only a few kilometers away from First Majestic's Jarrett Canyon mine, which is on track to restart production next year. The Tuscarora district is an advanced exploration asset. There's more than 40,000 meters of historic drilling on the project, including a past intercept of 4.57 meters of 127 grams per ton gold and 1.5 meters of 367 grams per ton silver and 52 grams per ton gold. The company is now drilling 3,000 meters at the first 10 targets and is aiming to release the project's first inferred mineral resource in the first quarter of 2027. To learn more about the project and the company, check out the link in the description down below. And as always, review the company's filings and risk disclosures before making any investment decisions. Fundamentally, though, so we talk about what moves currency pairs. So we talk about interest rate differentials, which, by the way, did not move the Japanese yen. But the fact that the Japanese long end of the curve moved up, the interest rates moved up, even the short end of the curve started moving up in the last 2 years, did not stop the yen from falling, which was an interesting fact. And I'll let you explain why. But other fundamental factors that drive the currency. So the growth of the economy, demand for exports, demographics, all these things, economists tell me, point to a much lower yen regardless of intervention. So maybe this looks to me like a Band-Aid on a bleeding patient that's going to require a lot more.
Yeah, and that's why it's the market versus the manipulators. I think that's exactly correct. The fundamentals don't change because of intervention, and the short squeeze has not started, right? Because if it did, you'd see follow through. The last few days, yen's actually weakened, right, against the dollar.
it's just optics wise, it looks like something really bad is happening, even though if you dig on the surface, nothing's blown up yet. The last time the US has done this, which is buy Japanese yen at scale, was during the 1998 Asian financial crisis, when there was literally currency crises across Southeast Asia and Japan and Korea. None of that is happening right now, right? We're not talking about a 50% collapse in the won right now, right? Or 80% collapse of the Indonesian rupiah. But somehow the New York Fed has determined that whatever situation is happening now or potentially about to happen, that needs to be backstopped right now.
Right.
I'm struggling to understand here.
No, I agree, and which shows you that if it's risen to the level of severity that it requires something you haven't seen since 1998. Again, I go back to that should give you pause, right? Anybody that's betting that the U.S. and Japan are going to get this right, I think, is betting against fundamentals. Is betting against a market dynamic which is still profitable, again, the carry trade, and like the only solution for Japan is to aggressively raise rates, which means good luck given its debt load. I mean, this is like end game type dynamics. It's just taking a while to play out. Again, it doesn't mean that you're going to have like a cataclysmic crash and the markets stay down, but like I'm sure we're going to wake up one day and it's going to be similar to what we saw in 2024. It may last longer than just 2 days. Okay, it could be very painful, and they can try to intervene from here to tomorrow, but I'm just not convinced it's going to matter.
So long term, then, you think that the Japanese interest rates will continue rising faster than the U.S. rates?
I don't. I think they want to do everything possible to prevent that. Now, people will say, well, it doesn't matter because Japan owns its own bonds. It's like, that's, to me, a silly argument also, because you're owning your own bonds and those bonds are losing money. Like, I'm pretty sure that hurts you as the owner, right? Because the rates rise, prices fall on the bond side. And let's face it, Japan's entire market is insolvent, because in the same way that banks here in the U.S. use safe collateral as treasuries, they're using JGBs. Okay, so you're going to raise rates aggressively. Now you have a bigger hole in the banking system in Japan. So it matters, folks. It's not like I'm not being an alarmist for no reason. I mean, this is Japan was the last coming out of COVID to get the inflation memo.
Yeah.
This is what it's about.
How would you play this? By the way, if you're a currency trader, would you be shorting yen right now after this big bounce up?
I probably would be going long gold. Yeah, which by the way, and when gold was going parabolic, and I was saying it's fudged, as I like to say on X, I was in the latter part of that momentum move. I think a lot of that collapse in gold, I think took the momentum traders out of gold. Gold now probably looks more like a risk-off asset again. If you notice gold's having an interesting delayed reaction to what's going on with Japan, and it's rallying. It looks like it wants to rally again. I don't know. It's like, I think you want to be long yen, but I think you want to be long yen after another attempt at lows.
Yeah.
People forget, it's like Japan's got high inflation. It's an export nation, yes. A depreciating currency is a way for them importing inflation. And then I go back to anybody that thinks this Iran war is going to be over is out of their damn minds. I keep saying this. It's not me being an alarmist. I'm Egyptian. I'm Coptic Christian. I'm born in America. I understand the culture. I know how these people think. I'm of those people. You are not getting out of this war. There's no deal. Okay, like this is going to take so much longer. In the same way that Bush said, mission accomplished with Iraq, and then a decade plus and billions of dollars and hundreds of thousands of lives lost. Finally, maybe it's over with Iraq. This is not going to be over that quickly. And all that means is that you're going to have this environment of constant risks of upside shocks to oil. If you're a country that imports all of its oil, like Japan, good luck in that environment.
Okay, I want to come back to oil in just a minute. Okay, your view on the yen. We've talked about that. Your view on interest rates in the U.S. now, right? Last week when the FOMC announced that they didn't hike rates, the bond market decided to step in and do that job for them. And so people are saying that, at least they're saying to me, that this isn't over. The 30 years already at above 5%. It's been there for more than a month and a half, but more to come, they say. So
just as I think on the betting on the prediction markets, the odds of recession have hit 0%.
Really?
I think that's actually pretty egotistical for prediction makers to think that there's zero chance recession can happen. There's always a chance, even if it's small. It's usually not zero.
Yeah. Okay. Yeah. You're right. It's not exactly zero here, but
it's
7%.
Yeah.
Huh.
But I
But
think
it's
it's on Poly
fallen.
Market and stuff like it's like it's something absurdly, close to nothing.
It was 35 right at the onset of the Iran war, peaked
Yeah.
around late March. I wonder what changed. I mean, oil prices have gone down, sure, but they've gone back up. So people
Right.
have just given up on the idea of a recession. It kind of shows because the stock market, we're getting sidetracked here, but that the stock market is firing on all four cylinders right now, or
Yeah.
six or eight, whatever, however many cylinders in your car. But
Yeah.
we have new all-time highs in the S&P and Dow every single, for multiple sessions now since the beginning of August. And now we're in the middle of earnings season. Earnings look great for most of these tech companies. Nobody is probably looking at a recession. This is interesting because you brought this up. The Consumer Sentiment Index, which is published by the University of Michigan, that is still at record lows.
Yeah.
It's a little bit
And
up from,
right. And discretionary
yeah.
stocks have been stuck in wind all year.
So I don't know what this prediction is based on. Is it based on markets or is it based on actual consumer sentiment? Because the two seem to be at polar opposite ends right now.
I'm with you, and it's like the stock market's not the economy. I would remind people that the Nasdaq also was making new highs into the start of the 2000 recession. So it doesn't mean anything that you're having new highs because things change. Again, not about me being bearish for the sake of being bearish. It's just the reality. It is interesting though, right? It's like I saw that. What didn't Trump, I think, today say something along the lines of we may have to send oil prices higher. I saw some posts about him saying that. And every oil spike tends to precede recessionary, contractionary periods. Again, nobody seems to think that's possible. But I keep going back to this scenario, which I don't hear talked about very often. It's like if Iran really wants to screw us, they really want to, in quotes, win this war. It's very, very simple. All they have to do is bomb their own oil fields. Watch what happens to oil if Iran does that. Which, by the way, I don't think is outside the realm of possibilities. It's like the best way to hurt the U.S. is for Iran to hurt itself.
What do you mean hurt itself?
Meaning to bomb their own oil fields, to take out
Oh,
their own. It's like, all right, you want to do this? Okay, then we're gonna hurt the U.S. where it matters the most, in the pocketbooks.
let's talk about that. Oil. Are you bullish or bearish right now?
I think it's more likely to have upside surprises than not. So I would be bullish on oil, on energy stocks. Um, Aside from the fundamental drivers and aside from the supply side, I just think that it's you want to put money to work where you have positive tail risk. Positive tail risk meaning oil could surprise right higher.
Yeah, oil could surprise higher. That could mean higher inflation, correct?
Yeah, or it could mean deflation if it's too fast of a move because the move is so sharp that it prevents companies from passing down the
Yeah.
added inflationary cost pressure to the U.S. so it hits margins.
Michael, nobody on my show, literally nobody on my show likes treasuries right now. Are you with the
Yeah.
crowd or are you the only one out? Where are you right now?
I hate treasuries too because they've been so bad to me the last
Yeah.
3-4 years. I mean, treasuries are using my risk off as my risk off play from a rule based perspective, my own funds, and two of my three funds. It's like phase one. I always said of the reverse carry trade was Japan would sell treasuries, so you'd have a spike in yields. Phase two of the reverse carry trade is the actual deleveraging takes place, and then money goes back into treasuries, and you finally have what we haven't seen really since 2020, which is a return of the risk off safe haven trade, meaning yields drop as everything else drops, right, under that scenario. So if I'm right about phase two, which I think is still coming, even though I thought it would be here already, I think it's obviously not yet. Treasuries are probably not a bad place to allocate. Duration is probably not a bad place to allocate if you're trying to be, risk averse. I know that's not popular to your point, but it's like if everyone's bearish on an asset class, you might want to be contrarian.
Okay. Michael, the gold forecast that you talked about earlier, let's go back to gold.
Yeah.
So you would be, to play this situation right now, you would be moving money out of something into gold. Is that what you're saying?
I think you're if you're going to design a portfolio without being short to play a reverse carry trade, you'd be long yen, long gold, long treasuries, and I mentioned yen, right? So long yen, long gold, long treasuries, and long oil, right? Like those would be your plays.
Okay. Do you still look at your lumber to gold ratio right now?
I do. Yeah, I do. I mean, and that's the thing. It's like that ratio has been great for anticipating small cap strength because lumber has outperformed gold and small caps have outperformed large caps, which is consistent with the work. Clearly, lumber to gold hasn't mattered in this cycle because housing doesn't matter in this cycle. And it's all about housing, and the link to lumber is about housing. Now, I will say, by the way, that I've argued this on X. The reverse carry trade, I would argue, is going to save housing. And And I say that because if you have the reverse carry trade play out the way I suspect it will, yields drop. You have a tail event, big decline in stocks. If yields drop, suddenly your 30-year mortgage rate is going to be a lot cheaper. In that flight to safety, in that scare that comes from that global Godzilla margin call from that music video I put out.
For sure. But okay, so your long gold thesis is based on the fact that potentially the yields will go down at some point.
That you're going to get a return of the flight to safety trade, which everyone seems to have forgotten about. That flight to safety trade basically is safety from credit risk. Now, if you haven't noticed, credit default swaps on a lot of these AI companies, Oracle, and some of these other data plays, those have been spiking. I know that sounds like it's unrelated, but it's all related because it's all about debt. I think if you're going to have some kind of repricing of default risk, Treasuries at some point will stand alone. Something else I've kind of alluded to on X. I don't know when, but I go back to typically the best returns come from those hated asset classes.
Okay, Michael, what do you not like right now?
Lack of sleep, I think is one way to say. I don't like
Everybody
the delta.
make an ETF based on how much sleep Michael gets and short it.
Yeah, short the ever-living crap out of it. Yeah, exactly. I also don't like the Delta change my flight or cancel my flight to Maine for this Camp Kotok trip I'm doing. No, I think. Look, this is going to be an unpopular opinion, but I say this purposely. I deeply, deeply believe, oddly enough, that tech is going to be one of those regulated sectors to come. Okay. And I'm saying this as one of the PMs of the free markets ETF, which is one of the reasons FMKT, we don't have tech, a substantial portion of that fund. Okay, the reason I'm saying that, you keep seeing these headlines of these AI models hacking into other companies. Regulation always comes after some cataclysmic headline. I think we are probably in the next 6 months going to see some really, really scary headline about AI doing something which nobody sees coming, which is very dangerous to society. The moment that happens, I don't care if you're Republican or Democrat, you're going to have regulation big time on the LLM AI side of things. That is going to hurt those stocks. Only a matter of time, right? You can't claim something is so powerful and then claim that it's going to do all the right things. At some point, it's going to have some kind of real damaging event, I think. And again, that's where regulation comes in. Regulation tends to be a very bad thing for stock returns. So I think if you're going to not like something, it's not about not liking stocks. I think you don't want to like tech, oddly enough, on that possibility.
Interesting coming from you, somebody who's been so heavily actually ingrained in the AI system 100%. In real life.
Yeah.
What kind of problems do you see happening that could actually force regulation?
Who knows? I mean, it's like, again, you keep hearing these stories about, this AI model hacked into this or that company. It's like,
yeah,
if the issue with AI is it's so fast and so powerful that you can't even identify and stop it fast enough. If it were, it's like Skynet, right? It's like everybody's worst nightmare from the movies could come true. And it's like, all right, if that happens, yeah, you better believe you're going to see something bad.
I'm going to finish off with this final question. And then I asked this to another guest earlier today. I'm going to get your opinion as well. Be interesting to see how you respond. This is the S&P 500. Yep. And even though there have been a number of pullbacks since last year, since the beginning of early April 2025, mid-April, when after Liberation Day, after the stock market basically crashed 20%, the stock market, the S&P is up 59%, almost 60% in a span of 15 months. Okay? So given that fact, we've just established that, it is difficult for any manager to beat the market first and foremost, and let alone have a 60% return year over year. Right. I wonder if this is just an environment where you go along the index and just don't worry about it. Because, obviously there have been stocks that beat the market, chip stocks in particular, those have been very volatile. But you've really got to be on the right side of the trade, because anything short of being with the extreme winners here, you're not beating the market. You're not beating 60% year on year.
The only way to beat the market, in quotes, is to choose a different market at the right time. Which means you either tilt smaller, so small caps arguably have been outperforming, or you tilt international, which is also outperforming. Now it goes back to my tech point. Okay, if tech were to get regulated and that becomes a sector which ends up being, from a forward-looking perspective, not as high returning, You don't want to be in the S&P. The S&P is basically an AI index at this point. It is a tech
Yeah.
index, right? So all this rests upon investor perceptions of tech being the only place to really put momentum money to work. And again, I go back to it's only a matter of time until I think you see something really bad happening with AI going somewhere which it shouldn't, in which case everyone's going to freak out.
Okay. All right, let's end it here. Thank you very much. We can learn more from you, and I know you write about your thoughts as well. Where can we go to learn more?
Leadlagreport.com, and of course at leadlagreport on X. Check out my Godzilla margin call. Rock
Okay.
solid. That's what I would suggest.
We'll put that in the link below. As somebody who's a fan of the Godzilla series, I'm looking forward to getting more of these intros on our show. So we'll play that again next time. Thank you so much. Hey, everyone, check out Michael Gayed. Links down below. And if you haven't already, please do sign up or subscribe to X, his X page. It's blown up. Thanks, Michael. Good to see you again, as always.
Always, my friend. Appreciate it.
Thank you for watching. Don't forget to like and subscribe as well.